This is the DeFi Decoded podcast by 9 Point Partners in cooperation with Prophecy DeFi. The ideas and opinions expressed in this podcast should not be taken as investment advice. Always consult with your financial advisor before investing.
Hello, everyone, and welcome back to another episode of DeFi Decoded. I'm Alex Tapscott here with co-host Andrew Young. This most recent crypto cycle saw the rise of alternative layer one blockchains. As Andrew and I have discussed a lot on the podcast previously, block space to run computations and transactions has proven to be a pretty scarce resource, and a lot of new platforms with novel and sometimes ingenious designs have launched to support the burgeoning growth of Web3 applications in DeFi, NFTs, and beyond. One protocol in particular, Solana, really, I think, typified the explosive growth of L1s, drawing in capital, users, and developers to its platform, at one point hitting a peak market cap of around $90 billion. And at the time, its share of DeFi TVL grew steadily, as did, I think it's fair to say, its mind share within crypto as a whole. And while prices have cooled somewhat across the board, our view here at DeFi Decoded is that the thesis for Web3 remains intact. And on today's show, we're very fortunate to be joined by Anatoly Yakovenko, who's a co-founder of Solana, one of the few, to discuss the origin of Solana, the problem Solana solves, what's going on in the world today, and a glimpse into the future. So Anatoly, thanks so much for joining us.
Yeah, thank you for having me.
So Solana was born in the last bear market, and here we are with crypto down from $3 to $1 trillion. Why is it that bear markets sometimes produce the most important innovations, both in crypto and in other parts of tech?
I mean, my story, I think it was the bull cycle prior to that was something that helped me dislodge me out of my career as an engineer and really finally take the space seriously. And I think this happens every cycle. This bull market, I'm sure, dislodged a lot of people out of their very comfortable Google, Facebook careers and made them start taking the space seriously. And there's a bit of survivor bias. Those that were able to swim, had to build through the bear market. But I think in general, once things cool off, there's less noise and it's easier for founders to iterate and build. And it's harder, because there's no easy wins, right? But when the wins that you do get become really important and actually meaningful signal. And I think that's really, really important for building, long-term successful ecosystems and things like that.
And so you said your story and your career prior to that. So why don't you tell us a little bit about your background before launching Solana?
I'm, I spent most of my career at Qualcomm. I'm, basically as soon as I landed there, started working on protocols like push to talk stuff, optimizations. I ended up as a kernel engineer on this operating system called Brew. This is one of the first mobile platforms that had developer traction. 2 million Jam Dad Bowling app downloads was a big deal at that time. And one of my last projects there was helping optimize augmented reality. This was Project Tango, Google's first augmented reality device. So I kind of saw the evolution of hardware and mobile and everything else and really kind of honed my skills as an operating system engineer. And this actually being somebody that builds stuff for devs, like a platform engineer, was what made me really interested in crypto, because I saw Ethereum in 2017 as the most interesting thing. These were, it wasn't clear what smart contracts were used for yet. It wasn't clear that these things had true product market fit across the real world. But what I saw was that devs are building stuff, and this is a neo OS. And this is what got really my brain kind of thinking about all the possibilities and how I would build it, and got me really curious about the space, I would say.
So you say that Ethereum was the thing that interested you the most at the time, but whether it's fair or not, I think a lot of people think of Solana as a project that tried to improve upon what Ethereum was doing, right?
They say Ethereum killer is like the
Yeah.
term.
Well, I think Ethereum, we always say like Ethereum killer is sort of a bit of a misnomer because it assumes it's sort of some kind of like zero sum thing here, where one succeeds and the other one dies. But to go back to it, like why is Solana called an Ethereum killer? I'm curious.
I think all smart contract platforms are really competing for the same thing, which is developers, like people that are willing to take risk and make those big bets, career bets, right? It's pretty hard for somebody to quit their job at Facebook or Google or whatever and give up their, basically guaranteed RSUs and things like that and try to get funding. Oftentimes, only 1 out of 20 of those make it. So it's not generally a good proposition. So the people that do try and go build these new businesses, new ways of taking these big risks, they're the most scarce resource. And I think all the layer ones are really competing for those. So I think in that sense, there is healthy competition, but I think it's healthy because it forces people that are building these platforms to build better tooling, make them cheaper, faster, more reliable. And that in turn means that Web3 grows faster, right? It means we actually get to see meaningful adoption around the world for all these applications.
Yeah. Yeah. Now, you mentioned earlier that at the start, when you launched, it wasn't clear what the product market fit was for smart contracts, but that there were lots of developers coming in. Is the product market fit for smart contracts clear to you now? And what are some of the areas where you're seeing the most exciting kind of Web3 development?
Yeah, we made, so at that time, while I was at Qualcomm, I've been like messing around on my own, trading options, derivatives, all sorts of random stuff. And this was my own homegrown built systems, calling like random APIs and interactive brokers or whatever. And I never made a dime. I like basically always consistently lost money. But I learned a lot. And what I learned was that me as a small hobbyist, I was always never got the best data. All my orders were never filled on time. Like just the system is not set up for that. So what I was really like kind of like inspired, like what can Solana be is this open, fair price discovery engine where as long as you have a box and you're in the world, you plug it in, you connect to the network, you're in the same level playing field as the Jump, Alamedas of the world, right? It's totally open for finance. So we literally called it blockchain and Nasdaq speed. So the use case that we went after was finance. At that time, nobody was calling it DeFi yet. Ether Delta and 0x were the only things that on people's minds. And I thought that those implementations were not sufficiently decentralized from the sense that the way orders are not handled in a deterministic way. You don't ever see a full global price view of the system, right? You're relying on relayers and all these other processes to make it a fair thing. And actually 0x has done an amazing job like within those constraints, but I thought Solana could be that one thing that everyone dreams of if you're ever trading. What if there was one giant global order book that was synchronized at the speed of light everywhere around the world? So, and that's the bet that we made. And we got lucky that DeFi became a thing. Like it was clear to me that finance and like these systems can improve upon finance because they reduce the cost of the complexity of running them to just hardware and Byzantine fault tolerance. And that's like a win for finance in general. But I didn't know that, we were going to have a DeFi summer and like they will actually get product market fit across like traders and all these other places like really, really quickly. So because we built it for that use case, we were able to kind of capture some of it. And I think the launch of Serum really demonstrated that Solana has something that no other chain has. I think still nobody else has built a central limit order book that runs as a smart contract.
Yeah, no, and I've been following Solana obviously for and Serum really was kind of the first major, I feel, DeFi app, and the growth in the Solana DeFi ecosystem has been pretty tremendous. Going from, I think, looking at DeFi Llama, went from under $100 million in TVL to about $3 billion today.
And all of this is homegrown applications. There's no way to copy and paste a Solidity smart contract. So you're relying on really implementing things with new primitives, which means you have to go through audits again and really rethink how the system works. So that's been challenged, but also created a truly separate developer ecosystem from Ethereum, which I think is good for the space.
Yeah, I wanted to actually dive into that. I was curious because obviously Solana doesn't have EVM compatibility, so you don't have the sort of copy pasta, as people call it, DeFi projects. It is a totally differentiated sort of ecosystem and developer set. I'm kind of curious, after sort of looking 18 months later, what are your thoughts on that decision to not have EVM compatibility? Obviously, it leads to sort of a more differentiated developer ecosystem, but obviously that it also creates barriers to sort of getting the ecosystem bootstrapped at the start. How were you able to sort of overcome that initially, and then moving forward, how do you think about it in the future?
Yeah, so we basically we never raised enough money to have the option to do both EVM support and a really fast runtime. So the kind of hard decisions that we had to make was that this thing only survives if it's something different, because there's so many EVM compatible chains. Like, there's no way for us to really differentiate. And me, as like somebody that worked in operating systems for a long time, I know that if we use EVM, it's the impact that we have on all these other places is going to be really limited. Like, it's not going to matter that we optimize consensus to the hilt or block propagation or the state storage. None of that stuff will show up because EVM is going to be such a constraint on everything else. So the choice that we made was that we're going to build a really fast runtime, and that's a risk, but it ended up being like really awesome for Solana. I think without it, we would have never had the same success. One, Serum would have been impossible, and then two, developers would be, looking at 10 EVM compatible chains and, pick them at random, basically. Right? There's no reason for an engineer to go try this new piece of tech, and engineers are just naturally curious. Like, it's not that they're, like businesses and like these bigger projects think that, well, I got to hire people to learn this new system, and then I can support like, Aave on Solana. And that's like a big business decision. And that's hard for medium-sized companies. But for a hobbyist engineer, they don't want to do that. That's boring, right? The only reason that they're going to code on the weekend is because there's something new and exciting to learn. So we were able to pick up those folks, and our hackathons were able to convert them to fundable companies. And that was like two surprising things that worked out that, we hoped would work, but didn't expect.
Funny that you said you couldn't afford to do both. It's almost like going back to that question of when you're raising money or starting in a bear market, you're resource constrained, which leads to like hard decisions, but sometimes they're the best decisions. Like, I think of a lot of, bull market funded projects that blew money on all sorts of stupid stuff, in retrospect. And with this, you had to make a good decision. I agree. You were definitely, was fortunate that DeFi launched the way it did. I want to talk beyond DeFi because there's been a lot of exciting sort of NFT projects and other Web3 like applications on Solana. So how are you seeing the growth of that playing out right now?
Well, yeah, NFTs have had insane growth, like in Solana. It's been like kind of unbelievable. 17 million NFTs minted. I think all the wallet growth and user growth when you go on Hello Moon, these are users with NFTs in them. And it's been just tremendous to see it. Totally, again, unexpected. And that came from, on Solana, that came from this project called Metaplex launching at the right time. It was after NFTs were popular on Ethereum, already after CryptoPunks, but it allowed artists to basically kind of WordPress style, self-directed, go mint and launch their auction. And we saw the first, kind of 10, 20 artists kind of stumble and like mess everything up. And like, but at the same time, despite like basically everything going wrong through the mint, they made, for an artist, life-changing amounts of money. Like 10, 20, $30,000 is more than an artist that's kind of doing this as their hobby will ever, for most of them, more than they'll ever make in their lifetime from art. So that really like both cemented that use case in my mind as really important, and I think in the ecosystem as well. So that I think like seeing NFTs play out with things like Magic Eden, OpenSea making millions of dollars, hundreds of millions of dollars in like profits without using at all the Google ad stack like for monetization on the web, really demonstrates that Web3 has a credible legs, that there's something here. And this is still like, we're talking about a world where, I don't know, maybe at most 10 million people are signing things on chain, like altogether.
Yeah. One thing you've also prioritized a lot, and I think that sort of jives well with NFTs and content, is a sort of mobile first approach. If you look at sort of adoption nowadays, obviously mobile adoption is tremendously important. And obviously Solana last month sort of shocked the world with the announcement of the Solana Sagaphone, which from my understanding is essentially an Android phone with secure key management that allows it to be a hardware wallet, and then also at the same time have sort of the Solana dApp ecosystem built directly into it. Also, please correct me if that's not the...
That's pretty close. So I wouldn't like, this is not competitive with Ledger. For cold storage, for like things that are secure, you should still use a very dedicated device. But this is a daily driver with these improvements in the hardware. What they allow to do is that you no longer need to trust your wallet to hold your seed phrase. That means that that piece of hardware that's managing it can now be the default identity wallet, like account system for all the wallets in your device. So when you hit tap to pay, the developer that's building a wallet, they can build an integration for tap to pay, and it'll come up when you're paying for your like, your coffee or whatever, and you can select whatever token you want. And behind the scenes, we can handle the fiat rails. So it opens up for developers that are especially wallet developers to have more features, because users no longer have to trust them to manage their key management at all, right? Like we can effectively sandbox them to build features that are more higher level. And the OS handles like the nitty gritty hard part of actual like managing your secret. And those translate into UX improvements. I mentioned that the tap to pay, like Solana Pay integration, but you open up a Web3 application today, it's got a wallet connect button. You don't need that button because the OS already knows what account you want. And right now, when you hit that button, you have 50 different wallets to pick. You pick a different app, it's got a different set of 50 different wallets. Again, you don't need any of that when the OS is managing the wallet, right?
Yeah.
And we don't want to be the wallet provider, right? Because that effectively pushes us to compete with Phantom. So making this a place for Phantom to innovate this is really how the system is designed. And the hope here is that, like, again, crypto, 10 million people maybe altogether are signing transactions per month. DeFi, NFTs, all of those included on all the chains. That's really too small for Apple and Google to give a shit about. So, but it's big enough, I think, for us to potentially have a breakthrough, like a real, like something, a real value driver for Web3, because 50,000 dedicated Web3 users who use this device on a daily basis in an app store that is actually integrated with Web3, doesn't have restrictions on how NFTs are bought and sold, is not charging 20 and 30% on every NFT sale, which doesn't make any sense, right? With user generated content, but with like true digital ownership, that business model just totally doesn't make sense. That app store is a better distribution channel for Web3 devs than the big app stores are today, even with only 50,000 users. So this is the big bet that we're making. It's a developer play. We're really focused on creating, again, I'm a platform guy. So, so when devs are constantly telling me like, we can't do the things that we want to do in mobile, we have to build these like weird web view integrations that link through wallets and stuff, I start pacing around the room and trying to figure out how do I help them. And if it wasn't for Jason Keats, I don't think this would have never happened. But I met this amazing hardware builder that was coincidentally building a new phone company focused on privacy, and like an awesome device that feels, I think, from just touching it and holding it, it's like as good as like any Apple device that's ever been built. Coincidentally, he was the architect of iBet Pro, so it's probably why.
So to clarify that, just for our listeners, the apps, like the idea of this crypto native app store, is this Solana only?
So everything is open source. We're obviously, our devs are focusing on Solana. We have devs in our community that are like both hold Sol and ETH, right? And they build applications for both. So if we will totally take pull requests and add support for other chains. I'm more of an open source maximalist than anything else. But it would be, I think, laughable for the Solana team to try to build an Ethereum integration.
One of the things that I've been trying to, wrestle with or figure out is the idea of what are the hardware upgrades that need to occur for Web3 to scale to, a billion or more people. What is the interface that people will be using to, interact with all of these applications? Like if you think about the history of technology, there was, the personal computer with applications that you download off of the CD-ROM and run on your desktop. And then there was the internet, and that interface was the World Wide Web and the browser. And then there's, the mobile phone, and that was the application ecosystem. And now we're in this Web3 stage. And you're starting with a phone, and I understand that it makes sense to try and to detach yourself from those walled gardens that those companies control and to create a more developer-friendly environment. But are there other hardware upgrades you think that need to happen? And I'm thinking specifically around, VR and AR and the metaverse and some of these other things. I don't know if that's something that you think about at all. I'm curious.
I mean, I think VR, AR is still like quite a ways in just fidelity from truly being like awesome. I can't tell if it's like iPhone 1 stage or Palm Pilot stage. And that means it's probably closer to the Palm Pilot stage still. Right?
Yeah, it's definitely. Well, iPhone 1 can't be, because that would mean that everyone would be going out and buying them, and they're not.
Right. Yeah. So it's still like not quite there. I think on network scalability, still a ton of, like, you look at Solana, our peak day from application transactions. So people that know about Solana know that there's vote transactions and application transactions. From applications transaction alone, there were 65 million transactions in one day. This was at a time when Pyth wasn't batching anything, so they were just submitting a ton, and that's more than all the peaks of all the other chains combined. But it's still not enough. Like, it needs to be 10x that, I think, at least, for us to see 100, 200 million users concurrently using the network. And that's not because the users are going to generate a ton of transactions. It's because it looks like all the services that are financial, especially, and I think everything in Web3 is basically DeFi under the hood. Those services require a lot of information to be synchronized. And by that, I mean like bots, market makers, price updates, all these things that manage risk and prices across all of these like pools of NFTs or DeFi pools or whatever. Those are effectively machine driven, and they send a lot of information into the system. So I think what we're likely to see is that for every person you add to the network, you're going to add 10x as much bot traffic. Like, not bot traffic, but like more information needs to be added to the system to support them. So there's still a ton of work left on just scalability.
Yeah, and there's sort of two approaches to scalability that people have sort of talked about. And one topic that we've sort of flagged a number of times is this idea that there's going to be tons and tons of different chains focused on different use cases. The big news out of crypto kind of last or 2 weeks ago was obviously DYDX, which is the largest derivatives exchange in the world, or blockchain derivatives exchange, launching the DYDX chain using Cosmos. And then at the same time, you also have sort of projects building kind of a one chain to rule them all, which some people have, whether that's fair or unfairly, sort of put Solana in that camp. I'm kind of curious, how do you think about those two sort of approaches to scaling versus kind of making existing chains just able to handle far more applications versus just creating tons and tons of chains? So there's obviously user benefits to one.
So I'll give you the bear case first. Prices and like go up in these systems when there's congestion, and it's not congestion for block space, it's congestion for state. There's one light switch, 10 people want to flip that switch. Doesn't matter how fast you can flip it. Doesn't matter if it takes 1 nanosecond or 100 nanoseconds or 1 millisecond. It's just that there's 10 people, one light switch. And it doesn't matter how many of them you can flip in parallel, right? None of that matters. It's just there's a single light switch and all those people want to flip it. And that hotspot, you can't move it into a zero knowledge proof. You can't move it into another app chain. It doesn't matter. As long as that demand for state exists and the supply is one, there's going to be a bidding war to access it. So that's the bear case, is that as soon as the system figures out how to isolate these events and make sure that when there's one light switch and 10 people want to flip it, it doesn't impact any other light switch, doesn't impact any other use case, that system in theory can scale to support everything. So Solana is designed for that. Solana is designed for parallelism. We isolate all the state. If there's a hotspot, only events relating to that hotspot should be dealing with congestion. Everything else should be hunky-dory. The bear case is that it's really, really effing hard to isolate. And you can see from the challenges that we've had when there's events that are like NFT mint, 8 million people build systems to send like 4 to 8 million packets per second, which Bitfinex called it a DDoS. That's like now like a monthly event, a weekly event on Solana. It's really, really hard to deal with those systems at scale when you're talking about like Google scale, 8 billion people, like everyone's using these networks, and all the information around finance and DeFi has to flow into the same kind of state machine. But you know, it's really, really hard. I think for that reason, you'll always see application chains, smaller chains, like smaller systems that try to isolate themselves from everything else. But you know, hardware gets faster every 2 years. Like in a span of 8 years, we should see a 30x improvement 8 to 10 years from now. And what that unlocks, I don't know, right? It could be that we will see this kind of runaway acceleration in how we can manage all of this information flow that we saw with, you know, everything else in compute, right? And we'll see. That's the bull case for Solana, is we can figure out how to bend silicon to our will.
I want to go back to something you mentioned earlier, which is you said everything in Web3 is DeFi under the hood, which I think is a really interesting formulation, but I'm not sure I understand it completely.
So NFTs are smart contracts. They have secondary royalties and all these other financial primitives, and they're pointing to DAOs, and those DAOs make financial decisions. And all of this is basically DeFi. It's just slightly different than Uniswap with like a governance token on top of it.
So like basically like the DeFi is that anytime there's an asset and a command regarding what happens to that asset, that's sort of,
and that creates that for the chain. What that creates are offers to trade, right? And those
Right.
offers create hotspots. So it's not like I'm dealing with logistics updates on salmon moving through like through the economy, right? That information doesn't matter when it lands if it's delayed, right? Like there's no like 100 people bidding to write to it. But with things like NFTs, with things like DeFi, you do have these very much like isolated points of demand. And
Yeah.
all the state that the network is really managing is dealing with these hotspots, dealing with everybody wanting the same thing at the same time.
Yeah, and just on that topic, one thing that I've been reading a lot about is this idea of financial primitives, right? And financial primitives is a term that's been kind of become popularized in the last, like, I don't know, year or so, maybe longer, to describe building. If you were to rethink financial services from the ground up, what are those like essential elements? And Paradigm, the VC firm, has an interesting way of looking at it. They call it the periodic table of DeFi primitives. So basically, like, what are the things that you need to fill in order to create that whole ecosystem or make that thing work. And we actually did something similar in the first book that I wrote, Blockchain Revolution. We called it the Golden Nine, and it included things like moving value, storing value, credit, trading, risk management, audit, and so forth. I'm wondering, from your perspective, like, what are some of the key primitives? You mentioned like royalties, which is another one that's sort of interesting. Like, what are the key things that are yet to be built, that need to be built in to complete that whole DeFi system?
Man, what are the missing primitives? This is, I think, a question that's like every startup founder should be thinking about, because if you unlock those, that's a massive opportunity. I think stuff that's still, there's a lot of stuff that got proven, I think, during these very volatile price fluctuations. I think it's clear to me that Aave is a better lender than any traditional TradeFi lender.
At least in crypto.
Right? Yeah, as a customer, right? Like, when you're, for anything, I would honestly trust Aave like over anything, because if the lender goes bust, it doesn't matter if 4 years later through bankruptcy proceedings you get the smallest amount of money after like everyone has extracted all the possible value out of it. That's like, that system is so slow, it like just doesn't work. And like with Aave, if there's a liquidation, you get your order filled and you get whatever you get. Like, even if there's liquidity issues and all these other problems that you could imagine could happen with DeFi, it's still way better and way faster and just way more robust, and really, I think, truly proven out in terms of the kind of transparency it provides. But what's missing there is, I don't know, like, I think with NFTs, we saw PFP sets really take off, and those sets are almost looking like micro communities, people that are able to form into groups like 90s bulletin boards on the internet, and they congregate on Discord, on Twitter, and they started to use tools for DeFi to manage assets that these NFTs collect. And sometimes they run validators and stake those assets to them, so they're participating in the consensus portion of the network. And I think there's a lot of work to be done on like making the community decision-making process just more robust, more transparent, and like with less failure points. Because you do see, like, I think there's really sadly, like recently there was an attack on the Audius governance contract where attacker made a proposal to give themselves the treasury. And like things like that are just like not robust enough, nowhere near as robust as Aave, right? Like, there's still, I think the ideas are there, but the implementations are just not as good as like things that we've seen proven out.
Yeah, no, blockchain governance is something that we've talked a ton about on the pod as kind of one of the weakest areas in our view of the entire ecosystem, particularly with DAOs. But another thing is that's somewhat controversial, obviously, is just kind of the informal governance of the Ethereum ecosystem, for example. or the relative lack of governance in the Bitcoin ecosystem. How do you guys think about governance at Solana? I know there's a Solana Foundation as well, which is more sort of plays more of a development and sort of development role. I'm just kind of curious what's I guess the governance process at Solana, and whether it's formal or informal.
It's like semi-medium formalish. So there's not much to govern. That like the goal with the protocol is to like make it cheaper, faster, more reliable, and those changes are just not generally non-controversial. Like there's a that's yeah, everyone's like, we build everything's built in open source like Linux, and there's a very long process to go from a master branch where things are developed to a testnet release where things get soaked and validated, plus there's a background and parallel audit process, and then things get upgraded to mainnet. And through that process, there's a lot of like inputs from everybody, and the kind of constitution is that like, does this make the network, is this a performance improvement, right? Does it reliability improvement? And those things basically are so non-controversial that there hasn't been much in terms of like voting or anything like that. In terms of like more controversial stuff, when there was like the inflation was turned on, we had open source way for folks to submit what they thought inflation should be and how those parameters should be defined. There were like 15 different submitters. All of them were optional until 2/3 of the network picked one. Whichever one they picked is the one that got activated. And stuff like that, like picking the hyperparameters, I think because they're not performance related, they don't really impact like reliability or how the network, like the nuts and bolts of the network, how it operates, I think is really up to the community to decide how that works. And we tend to stay out of the way on those. It's just we haven't seen a ton of like need to make the decisions like that, because we have a ton of work to do on the performance reliability side, which is like the day-to-day grind. And I like that more because it really like it narrows the focus of what everyone's working on, and there's just simply less like infighting or anything like that. Because the network wasn't proof of work to begin with, there's this controversial like, do we do proof of work and proof of stake things? And those decisions I think end up being very financial to the people involved, because miners are going to lose, right, their bread and butter, right? And how much say should they have in the process, right? And things like that is really, really hard to make those, to decide on that. But
yeah. And that actually tees up our last question, or at least my last question, very nicely, which is obviously the upcoming merge happening in the Ethereum ecosystem. And we've talked a ton about it on the pod as well. I'm just kind of curious, what are your thoughts on the merge?
Yeah, I'm excited about it. I like Ethereum's new design and the way that it's trending. It changed a lot. When we first started building, they were talking about basically application execution sharding, and everyone like that came from like traditional like background was like, it's just not going to work. And luckily it took them a while, but the design they came up with is pretty good, and I'm excited to see move forward. People again always ask me, what does this mean for Solana? I think generally what this means is that we can kind of kill the meme that NFTs are bad for the environment, because every major chain where there's stuff happening now with NFTs and smart contracts is now proof of stake based. So that would be really good for Solana, because when we have those conversations, we have to like educate people, like spend 30 minutes talking to them just about that part. And the second part, I think what this means for the space in general is that like you see like development and the stuff that is actually touching users is going to happen more at the L2 layer for Ethereum. And I think that's actually the more competitive part. Is Solana really competing with the Ethereum settlement layer? Not really, because like settlement is like the most boring part of what Solana does, right? That's not even like interesting. Like if all the assets were settled in Ethereum but were bridged over to Solana, it wouldn't really matter, right? I think all the execution and actual like building products to get users, like all that stuff is happening on a layer outside of like the L1 for Ethereum. And that's really, I think, kind of exciting, more competition, more innovation, more PMF, more users actually using crypto.
Couldn't agree with you more. I love that comment about the energy usage. It's something that we encounter all the time, in educating people about the space and investing in it. So I'm with you. To be able to eliminate that, at least from the conversation around everything non-Bitcoin, I think would actually would make the world a more efficient place, because we wouldn't be spending 30 minutes clearing our throats on this issue before getting into the other stuff, honestly.
Yeah.
I'm looking at the clock and I realize this has actually been going on for 45 minutes. What an amazing discussion it's been. Typically these episodes are, half an hour long. So for everyone who's listening, it's a little bit of an extra treat that we went later than expected. And Anatoly, we've used up lots of your time. It's been a really wonderful discussion. If people want to follow you and learn more about Solana, what would you recommend? If they don't already know about you.
Yeah, follow the Solana Twitter. There's a hacker houses, hackathons. There's a summer camp hackathon happening right now. We blew past our previous registrations. When people talk about like, is this a bear market? And I see that we hit 10,000 registrations in like basically a week. And the previous hackathon during the bull market had a total of 7,000. I'm like, I think this is a really exciting time to join crypto. So like, also go to solanamobile.com, pre-order that phone. So excited to see like all these new folks joining crypto.
Absolutely. All right. Thanks. That's it for us this week. Thanks again, everyone, for joining. Thanks, Anatoly, Andrew. Some great questions as always. We'll see everyone next week. Until then, take care. Bye-bye.
Thanks. Bye-bye.
Thank you.
The information contained herein does not constitute an offer or solicitation by anyone in the United States or in any other jurisdiction in which such an offer or solicitation is not authorized, or to any person to whom it is unlawful to make such an offer or solicitation. Prospective investors who are not residents in Canada should contact their financial advisor to determine whether securities of the funds may be lawfully sold in their jurisdiction.